Welcome back. And this is the most important video of the entire direct tax subject. Yes, I am saying this is the most important video because we are going to talk about section 115 BAC. This single section will change the entire problems in your direct tax. So how the solution would be will be completely revamped because of this section. So that's why this section you have to learn compulsory and as amended by Finance Act 2024, which is applicable for your June-December 2025 exams, I am going to discuss. So listen to this video and I'll tell you one thing which I am going to do with this video. Normally, if it is a theoretical concept, I explain the theory and complete it. But this being a theoretical and has lot of practical application, I am going to do both in this video. So I'll not only teach the theoretical part and will not tell you that we'll do numerical in the next video. We'll actually show you how the numericals would be solved after the application of this concept. So both we are going to do. So that's why this is so special for all of you. Okay. Now let's start with the lecture. Now we are going to discuss about section 115 BAC. Now to whom this is applicable? To 5 different assessees it is applicable. To whom? 5 different assessees. Who are they? Individual, HUF, AOP, BOI, AJP. You know individual, HUF, Hindu Undivided Family, AOP, Association of Persons, BOI, Body of Individuals, and AJP, Artificial Juridical Person. I was telling about Usmania University, Bar Council, Hindu deities. Yes or no? They are all artificial juridical person. For them, this section applies. Now, why this section is so important? Because this section is called as default tax regime. So whatever under income tax 1961, whatever provisions we were discussing till now for so many years, from 50 years, they are the regular tax regime. And after the launch of this section, this became default tax regime now. That means if suppose you don't decide that you have to file return under 115 BAC or under normal tax provisions, yeah, we can say optional tax regime, then you automatically will fall under 115 BAC. Are you able to understand? So, for filing the income tax returns, there are two different ways. There are two different modes. One is 115 BAC, that we call it as default tax regime. And it is auto-selected in your income tax return. But if you want to switch out of it, if you want to opt out of it, then you have to fill certain form and then you have to actually opt out. And that's why the old regime, the regular regime, is called as optional tax regime. Now the tax treatment of many items in default tax regime and under optional tax regime are actually different. What is the difference? I am going to explain in this video. But let's start with the basic thing that this is applicable to 5 assessees. Who are they? Individual, HUF, Association of Persons, Body of Individuals, and Artificial Juridical Person. Now, what is the rate applicable under default tax regime? Here it is concessional rate. That means you have to pay less tax as per the tax rates. Let's see what are the rates. Up to 3 lakhs, no need to pay single rupee tax. So 0 to 3 lakhs rupees, no tax, nil. 3 lakhs rupees to 7 lakhs rupees, 5% is the rate of tax. 3 lakhs rupees to 7 lakhs rupees, 5% is the rate of tax. 7 lakhs rupees to 10 lakhs rupees, 10% is the rate of tax. And 10 lakhs rupees to 12 lakhs rupees, 15% is the rate of tax. 12 lakhs rupees to 15 lakhs rupees, 20% is the rate of tax. And above 15 lakhs, the rate is 30%. Now let us repeat together. Come on, repeat with me. Up to 3 lakhs, nil, no rate. Correct? 3 lakhs to 7 lakhs, 5%. 7 lakhs to 10 lakhs, 10%. 10 lakhs to 12 lakhs, 15%. 12 lakhs to 15 lakhs, 20%. 15 lakhs above, 30%. This way you have to repeat with me and remember. Now suppose I'll tell you that my income is 20 lakhs. Now, if my income is 20 lakhs, will you say that 20 lakhs into 30%, sir, your tax is 6 lakhs? The answer is no. This is completely wrong. So my income is 20 lakhs doesn't mean 20 lakhs into 30%. Sir, above 15 lakhs you said? I said above 15 lakhs, 30% is the rate I said. Okay. That doesn't mean that if I say 20 lakhs income is there, directly 30%, 6 lakhs tax. No. Because this is a slab rate of taxation. Right? So, for particular level of income, particular rate applies. If the level increases, for the increased level of income, increased rate of tax. Right? This is how tax is computed. Now, how to do it? I'll show you with a numerical. We are not solving problems. So for you to understand, I am showing this. That's it. Okay. Mr. Joshi is there. His income is 20 lakhs. Now we have to compute his tax. See how it is computed. Up to 3 lakhs, no tax I said. So obviously no tax. 3 lakhs to 7 lakhs, 5% I said. Correct? Now, higher limit minus lower limit we have to do. So 7 lakhs minus 3 lakhs we have to do. So 4 lakhs will come. So on this 4 lakhs, 5% when we apply, 20,000 rupees tax comes. Okay. Similarly, 7 lakhs to 10 lakhs. 10% is the rate of tax. That means higher limit 10 lakhs minus lower limit 7 lakhs. Difference is how much? 3 lakhs. 10 minus 7, 3 lakhs. 3 lakhs into 10% comes to how much? 3 lakhs into 10%, 30,000 aayega na? Very good. 30,000 will come. Now 10 lakhs to 12 lakhs. Now higher limit is 12 lakhs. 12 minus 10, 2 lakhs difference. 15% is the rate. So 2 lakhs into 15%, again 30,000 will come. 2 lakhs into 15%, again 30,000 will come. Right? Now, let's come to the next level. 12 lakhs to 15 lakhs. Right? Higher slab minus lower slab. 15 lakhs minus 12 lakhs. 3 lakhs is the difference. And what is the rate? The rate is basically 20%. So 3 lakhs into 20%, 60,000 will come. Okay. Similarly, 15 lakhs above, the rate is 30% I said. How much income is there in our case? It is 20 lakhs. So for 15 lakhs to 20 lakhs, right? So basically 20 lakhs minus 15 lakhs will do. We'll get 5 lakhs, higher slab minus lower. So 5 lakhs difference will come. 30% will multiply. So 5 lakhs into 30%, 1 lakh 50 will come. Right? This way we have to compute the tax. Now we applied all the slabs. 0 to 3 lakhs, nil, 3 lakhs to 7 lakhs, 5%, 20,000, 7 lakhs to 10 lakhs, 10%, 30,000, 10 lakhs to 12 lakhs, 15%, 30,000, 12 lakhs to 15 lakhs, right? 20% is 16,000, 60,000 will come, 15 lakhs to 20 lakhs, it is 30%, 1 lakh 50,000 will come. Now we have to do the total of all this, right? 20,000 plus 30,000 plus 30,000 plus 60,000 plus 1 lakh 50,000, right? These 5 items we have to do the total, right? Now, okay, 2,90,000 total should come, correct? 20 plus 30 plus 30 plus 60 plus 150 is equal to 2,90,000. Now, I already said to you in the last lectures that if tax is calculated on the income, then we have to add health and education cess. So 4% is the rate. So on 2,90,000, when we apply 4%, how much will come? 2,90,000 into 4% you do. You will get 11,600, correct? Yes, you are right. So 2,90,000 plus 11,600. When you do the total, you get 3,01,600. So this is how you should apply the rates. That's what I wanted to tell. So it is not flat rate. It is basically slab rate. As your income increases, the rate increases for that extra income, right? Not the entire income. This difference you should be able to understand. Now, but government giving concession is so easy? No. Government will give concession with some conditions. You have to sacrifice a lot to get this reduced rate of tax. What are that sacrifices? Let us see now. 1 minute. Let's start. Section 10 subsection 5 is the first sacrifice. What it talks about? It talks about basically leave travel concession. Now, if you are actually traveling by air, right, in a year there are two trips you can actually take up, right? And employer may give you certain money, right? Pay your travel expenses and you can enjoy the benefit. But income tax says we'll tax you. But it also says under section 10 subsection 5 we'll give some exemption. Like example, if you travel by air, your economy class fare is exempted, right? If you travel by train, your first class AC fare is exempt. If you travel by bus, your deluxe fare is exempt. More than that, if the employer paid for you, that becomes taxable. That's what we'll learn when the salary chapter comes. But I want to tell you that leave travel concession benefit which the employee gets from the employer is generally taxable. And from that, exemption under section 10 subsection 5, some exemption is given, right? This is what the concept is. But this concept continued for so many years from 1961 till now. But if you file return under default tax regime, then the exemption which you were to get, that exemption you will not get. That means the benefit what you received from the employer becomes completely taxable. So what we were to do from 1961 till now, whatever benefit from employer minus exemption under section 10 subsection 5, balance was taxable, right? And this still continues under optional tax regime. You can do the same in optional tax regime. But suppose your return is filed under default tax regime, then entire leave travel concession fully taxable, no exemption benefit, right? This way you should understand. Similarly, all the list which I am going to discuss will apply. Let's see 10 subsection 13a. It's actually house rent allowance. Most commonly, almost every employee gets HRA from the employer. You are paying house rent, so I am giving you house rent allowance. That means some money employer will give to employee so that he can pay the rent of the house. There also, whatever allowance we were to get, from that, exemption under section 10 subsection 13a was deductible, right? Those who have studied HRA can understand that actual HRA or rent paid minus 10% of salary, or 40% in case of non-metros and 50% in case of metros, right, of salary, least of the three is given as exemption. We discussed, right? In salary chapter, we'll discuss. So those who are just listening for the first time taxation lectures, for them just a glimpse of what you are going to know. And for those who have already studied these things and are listening this video for revision, for them, don't worry, you are going to get complete picture of the whole story. Okay. So 10 subsection 13a, your HRA, whatever employer pays, you will get minus the exemption, and balance was taxable under optional. But if you file return under default tax regime, that is 115 BAC, then you have to forget this deduction. That means entire HRA received from employer becomes taxable to employee if you file return under default tax regime. Similarly, 10 subsection 14 also. There are list of allowances, right? There are list of allowances where you will actually not get the benefit of deduction if you file return under default tax regime. Okay, like I'll tell you that under 10 subsection 14, you will have uniform allowance, you have helper allowance, you have something called as professional development, research allowance, academic allowance, like that. You have scheduled area allowance, tribal area allowance, hill compensatory allowance, underground allowance is there, transport truck driver allowance is there. All these allowances are there, which we'll discuss under 10 subsection 14. I'm just giving a list for all of you. When you study salary chapter, you will understand in detail. Don't worry. Okay. But in all these allowances, some portion was given as exemption based on the legal limits or based on actual expenditure. But that is there still in case of optional tax regime. But if you file return under default tax regime, you will not get the deduction under 10 subsection 14. Similarly, 10 subsection 17, this is given as allowances to MLA, MPs, daily allowance. They were to get allowance and they were to get exemption. But the point is, under optional tax regime, under the regular regime, under the old regime, MLAs, MPs are still enjoying the exemption. So whatever allowance MP, MLA received minus the whatever amount spent by them, balance becomes taxable. But under the default tax regime, under 115 BAC, entire amount is taxable. Whatever allowance received by MP, MLA for daily allowance. Okay. Similarly, we have section 16 also. Please remember what is section 16. It is basically talking about deductions under salary. From gross salary, whatever you get, deductions are there. Now, wherever you do job, you pay some tax to the state. We call it as professional tax, or we also call it as employment tax. Now, if you file return under default tax regime, no deduction for it. Whereas in the old regime, you were to get deduction and you still get that deduction. So that regime still exists. It's your choice whether you want to continue under optional or you want to continue under default or opt out and go for optional tax regime. It's your choice. Both exist. So if you want to get the deduction of professional tax paid, then go for optional tax regime. There you can deduct it. But under default tax regime, no deduction. Similarly, entertainment allowance also, under default tax regime, no deduction. Whereas under optional tax regime, you were to get deduction, you will get deduction. Then where's the benefit? The benefit is under standard deduction. So standard deduction is a flat deduction which the employees get from the salary income. Here the government gives some support to default tax regime. And that is, if you file return under default tax regime, 75,000 flat deduction is given. Whereas if you file return under optional tax regime, only 50,000 flat deduction is given. This is the difference. Are you able to understand? So standard deduction 75,000 you can deduct if you file return under default tax regime, and if you file return under optional, only 50,000 standard deduction is available. This way you should be able to compare between default tax regime and optional tax regime. Now you understood 10 clause 5 I discussed, 10 clause 13a I discussed, 10 clause 14 I discussed, 10 clause 17 I discussed, then I discussed section 16 also. Similarly, you come to section 24b. Don't worry, yaar. I remember I have to cover 10 AA, right? I have to cover 1032. I'll not forget, I'll not leave it, don't worry. First come to 24b. Dekho, when we talk about income from house property, there are two types of properties. One is let out property. Let out property means we gave it on rent. Then if the property is let out, whether you file return under default or you file return under optional tax regime, there is no difference in treatment. Both are treated alike, equally. So I am not going to discuss. But suppose the property is self-occupied property. That means you are staying in the property. In that case, the difference is there. Dekho, when actually you will study income from house property chapter, in that chapter, dekho, you take a housing loan. It's common, na, everybody to construct the house, to purchase a flat. You cannot directly pay entire thing in cash. Most of the cases, we take some loan. And most of the cases, on that loan, we pay interest also. So that interest is deductible, right? So interest is deductible under section 24b. But if you file return under 115 BAC, then forget about getting the deduction of interest if it is a self-occupied house property, right? For self-occupied house property, no deduction of interest. So what did you learn? In a house property chapter, there are two types of properties. One is let out property, where if you file return under default tax regime 115 BSE or optional tax regime, no difference in treatment, both are same. But if it is a self-occupied house property, you constructed the house property, you purchased the flat, and you are staying in the flat. In that case, if there is a loan attached to it, you are paying interest on that loan, then in default tax regime, no deduction. You cannot deduct the interest paid. But under optional tax regime, you can deduct. This is the difference. Now suppose if you actually solve the problems, right? Problem solving, right? Because you will get questions, and at the end of the question, they will ask you that compute the income under default tax regime. Or under the question, they will say the assessee has opted out of default tax regime. That means he is filing return under optional tax regime. Like that, they will give at the end of the question. You should be able to differentiate between both and solve the answer correctly. And for that purpose, I have brought this computation. Let's see some computations for you to understand. And here, whatever is commonly done in both, I'm not going to discuss. Because whatever is common, whenever the respective chapter comes, topic comes, we'll anyhow understand. Whatever is difference in treatment, that I try to highlight it here. Let's see. Anyhow, so we are going to compute the total income in this problem. So first type of income comes salary. Okay. Now, there are two regimes I said, default tax regime and optional tax regime. I said there are two regimes. One is default tax regime, one is optional tax regime. So both columns I have put for you. Now let's see the comparison. Now when it comes to basic salary, your basic salary is suppose 6 lakhs. your DA is suppose 2,40,000. Now this is taxable in both the cases. Whether you file return under default tax regime or optional tax regime, no difference. That's why when I wrote basic salary, in default also I wrote 6 lakhs. In optional also I wrote 6 lakhs. In dearness allowance, I said it is taxable in both the cases. So there also I wrote 2,40,000, 2,40,000 in both the cases. So there is no difference in treatment in both the cases. But come to leave travel concession now. You got the benefit. How much? Employer paid for your travel expenses 60,000 rupees. When we saw that the economy fare of the aeroplane, 20,000 exemption you can get under 10 subsection 5. We saw, we understood. What we did, from 60,000, we'll deduct 20,000 and we'll tax 40,000. From 1961 till now we were doing the same. But that, if you want to do, you have to go for optional tax regime. That's why you see 60,000 minus 20,000 I did, and I wrote 40,000 in optional tax regime. But can you do the same in default tax regime? I said no. Can you enjoy the exemption of 10 subsection 5 if you are filing return under default tax regime? I said no. That's why when I show default tax regime income, I'll show entire 60,000 as your income. I'll not deduct anything because entire leave travel benefit you got from employer is taxable under default tax regime. So default tax regime, complete 60,000 is taxable. So suppose you want to get the exemption under 10 subsection 5, you have to opt out. You have to file return under optional. Then you can deduct this 20 and you can only pay tax on 40,000 in optional tax regime at higher rates of tax. Right? In default, lower rates of tax, but no exemption benefit. In optional, higher rate of tax, but lot of exemption benefit. This is the difference. Now come to HRA, house rent allowance. Employer paid you house rent allowance of 90,000 rupees. He said, go, enjoy, pay your rent. So when we checked under 10 subsection 13A, right, list of the following 3, I said, na, array, actual HRA, rent paid minus 10% of salary, 40% of salary in case of non-metros, 50% of salary in case of metros. We discussed that, right? So if we deduct this, we got 30,000 rupees. Now, in default tax regime, there is no benefit of exemption under 1013A. So entire 90,000 is fully taxable. Entire 90,000 is fully taxable in case of, अरे बोलो तो सही, default tax regime. But now let me tell you, if you are actually thinking about something called as optional tax regime, there you can get the benefit of 13A, 1013A. So you will take 90,000 minus 30,000, you will pay only tax on 60,000 income. Right? Similarly, I am talking about 10 subsection 14. What I said in 10 subsection 14? I said if it is basically helper allowance, academic development allowance, professional tax, professional development allowance, research allowance, right, hill compensatory allowance, underground allowance, scheduled area tribal allowance, right, children education allowance, I forgot to write there, right, hostel allowance. These are lists which we have to remember. So in these type of allowances which I just stated now, you will see that there is a difference. You will not be allowed to enjoy the exemption in default tax regime. So your allowance is 1,20,000. So entire 1,20,000 is taxable if you file return under default tax regime. But suppose if you opt out and file return under optional tax regime, then your 1,20,000 minus exemption under 10 subsection 14, that is 30,000. Then under optional we wrote 90,000 rupees. This way you should be able to understand. Okay, very good. Now let's come to next part. These are 4 allowances which you have to specifically remember. We'll stress more in the salary chapter, but still you have to remember, because these 4 allowances, no difference in treatment in both the regimes. What are they? They are daily allowance, traveling allowance, conveyance allowance, and transport allowance to disabled employees. Right? Daily allowance, conveyance allowance, traveling allowance, and transport from office to home only for disabled employees. These 4 things you have to remember. Right? In these 4 cases, the treatment is same in both the regimes, whether it is default or optional. Suppose you got 1,50,000 as allowance on any of these 4, and 30,000 is your deduction. So you can deduct this 30,000, and 1,50,000 minus 30,000, 1,20,000 will come. And 1,20,000 is taxable in both the cases. So for these 4 allowances, there is no difference in treatment. What are they? Daily allowance, traveling, conveyance, and transport employee for allowance for disabled employee. Right? There is no difference in treatment. You can enjoy the exemption in these 4 cases. Okay? Like this you should remember. Now let's come to 10 subsection 17. Now you are somebody called as MP MLA. You are getting daily allowance and you will get the exemption under 10 subsection 17. You got an allowance of 1,80,000. Now you have exemption of 1,80,000 also. Right? You spent entire amount, you got exemption of 1,80,000. So 1,80,000 allowance minus 1,80,000 exemption. 0 is your income if you file return under optional tax regime. But under default, you will not get the benefit of exemption, even if you are MP or MLA. Right? So in case of MP MLA, daily allowance received of 1,80,000 is fully taxable in case of default tax regime. So daily allowance received is fully taxable in case of default tax regime. Okay? Right. Now let's come to optional. Optional, you will get the exemption. So 1,80,000 minus exemption 1,80,000 again. So nil. Okay? This way you should be able to understand. Now we got the list of all items which are taxable. Okay? Under optional we got, under default also we got it. Let's do the total and we'll get the gross salary. When we do the total, we'll get the gross salary. Now, once we get the gross salary, we have to deduct some things under section 16. I said professional tax which we pay to state government and entertainment allowance under section 16 subsection 2. These 2 are allowed only under optional. That's why 2,000, 3,000 we wrote only in optional. Right? We deducted there. But in default, nothing, nil. No deduction for professional, no deduction for entertainment. This difference you should be able to understand. Come to standard deduction. Standard deduction, here default tax regimes gives more benefit to you. 75,000 deduction under default tax regime. Standard deduction, 75,000 deduction you are going to get. Okay? Whereas under optional, only 50,000 deduction. Okay? So once standard deduction under default 75,000 flat, right? And under optional 50,000 only. This difference also you should remember. Now from gross salary, when you deduct this 75,000, you will get net salary, that is salary, taxable salary income. Similarly, in optional also, when you deduct the three items, 2000, 3000, 50,000, you will get taxable salary income. Now I already said about let out property. So when I talk about income from house property, I said there is no difference in treatment if it comes to let out property. So I did not write it here for you to actually get more content actually, because I am going to explain 115 BAC. So differentiating points actually we should understand. So let out both are same, so we ignore them. But self-occupied house property, you are staying in the property. So is there any income? Is there any rental income? No. So there is no rental income. So net annual value will obviously be nil. So net annual value, that is rental value, rental income is nil. And from that, standard deduction 30% of NAV. Anyhow, nil minus 30% nil. Interest on loan 70,000 is there. If you purchase the house for your personal stay, still if you have taken the loan, you have to pay the interest, na? So that interest is 70,000. If it is a self-occupied house property, this interest of 70,000 is not deductible. So that means your house property income is zero and your deductions are zero. So your income from house property will be zero only. There is no negative income from house property also. Right? But in optional tax regime, you see, obviously your income is zero, but interest is deductible. So 70,000 deductible under optional tax regime. Interest on loan under section 24B is deductible. So 70,000 is deductible. So your income from house property is negative, minus. So what will happen? Dekho, if suppose you have two different businesses. One business is making profit, another business is making loss. What will you do? So whatever profit making business minus loss making business, your net income we can compute, correct? Yes or no? Similarly, your salary has positive income. House property has 70,000 loss. That loss you can deduct, na? So this way, your taxable income will be reduced. So this can be done if you are filing return under optional tax regime. In optional tax regime only, self-occupied property interest is deductible. Negative income from house property can be shown, and that can be deducted from other incomes, so that you can actually show less income and save some tax. But in default tax regime, can you show the interest on loan if your house property is owned and you are staying in it, self-occupied property? No. So you cannot show that expenditure. So your income from house property will be nil in default tax regime. So obviously you cannot adjust it from other nets. That's the problem. Okay. Like this, we have to compare and understand the default tax regime and optional tax regime. Right? Now, 2-minute break we'll take and we'll continue. Now, let us understand actually something called as 10AA section. So, what is 10AA? It is actually talking about special economic zone. Now, here the businesses are encouraged to set up businesses. Mostly they were all rural areas. To develop the rural areas, to build infrastructure, SEZ as a concept was introduced. And it is successful also. Now, when SEZ was developed in different areas, lot of benefits from government were given, including the tax benefit. Like in the first 5 years of SEZ unit, whatever income earned 100% is exempt. From 6th year to 10th year, 50% of the SEZ unit income is exempt. Right? in after 10th year with some conditions, some exemption was given. Like that, there were so many rules made. So now that SEZ exemption, that SEZ unit income minus SEZ exemption under section 10AA continued from 1961 till today in optional tax regime. But under default tax regime, this exemption is not given, not allowed. So SEZ unit income is fully taxable if you file return under default tax regime. Under optional tax regime, okay, SEZ income minus 10AA exemption, balance is taxable. Similarly, there is a section called as 10 subsection 32. This don't talk about the assessee's income. It actually talks about the income of other persons included in assessee's income. Suppose example, my wife's income is included in my income. A minor child's income included in the parent's income. Like that, it can happen, and there is a separate chapter which we'll discuss on it. But whenever such clubbing is done, such adding is done, right? Minor's income is clubbed in the parent's income. Then parent get a minor nominal deduction of 1500 rupees per child per annum. That means, suppose there are 3 children and each children is earning some income. Their income will be added in parent's income, and then 1500 per child will be deducted also. So this 1500 deduction is given under section 10 subsection 32. Now, can you deduct it under optional tax regime? The answer is yes. But can you get the exemption under default tax regime? The answer is no. So section 10 subsection 32 deduction not available, 1500 rupees per child per annum cannot be deducted even if the minor child's income is added to the parent's income. This way you should understand. So now, if I simply ask you, if you file return under default tax regime, if you file return under optional tax regime, will minor's income be clubbed in parent's income? The answer is yes. In both the cases, clubbing will apply. Income will be added in both the cases. But will you get the exemption of 1500 to the parent under section 1032? In default tax regime, no. In optional tax regime, yes. Okay, this way you should understand. Now, let's continue with something called as business head. What they say? They simply said that under, if you earn business income, you also incur certain expenditure. Like you have plant and machinery, you have furniture, you have building, right? For that you claim depreciation. Now in income tax, there is a normal depreciation and there is additional depreciation also. So there is normal depreciation and there is additional depreciation. Normal depreciation is deductible in both the cases, whether you are filing return under default tax regime or under optional tax regime. No problem. Normal deduction is deductible. You can deduct both. In default also you can deduct normal depreciation. In optional also you can deduct normal depreciation. But what about additional depreciation mentioned under section 32 subsection 1 clause 2a? Additional depreciation was deductible under optional tax regime and is deductible under optional tax regime. But under default tax regime, additional depreciation is not allowed. So what is the whole story now to remember? In default tax regime, normal is allowed, additional not allowed. In optional tax regime, normal also allowed and additional also allowed under default tax. Right? Similarly, there is something called as section 35. Section 35 talks about scientific research. Now, scientific research related expenditure can be of two types. One is in-house scientific research, which we do for our business, which is mentioned under section 35 subsection 1 clause 1, right? 35 subsection 1 clause 4. So we talk about in-house scientific research for our own business. And second one is the contribution. You give donation to IITs, national laboratories, universities for doing scientific research. So when we talk about section 35 scientific research, two items come. One is in-house and one is contribution. So please remember that if you file return under optional tax regime, whether it is in-house scientific research, whether it is contribution to scientific research outside your business, both are deductible, right? Under optional tax regime, whether it is in-house scientific research, whether it is contribution, both are deductible. But what about default tax regime? Here we put a restriction. In-house you deduct, no problem, it is for your business. But why you are contributing? Why you are giving donation to other? No need to give. So default says in-house scientific research is deductible and contribution to scientific research, to IITs, to national laboratories, to universities, Indian company in scientific research, you cannot deduct this. So in default, only in-house scientific research is allowed as deduction, whereas in optional, in-house as well as contribution, both are deductible. This is what we have to remember. Now, whenever we talk about contribution to scientific research, we'll discuss more in detail when we go to PGBP chapter. Don't worry. But still I am telling that section 35 subsection 1 clause 2 clause 2a clause 3 talks about actually contributions. Okay, giving donation. So whenever you see in a question, you may not remember the sections or clauses, but at least you can differentiate, na? It is for your business or is it donation to others? If it is your business, then deduct under default tax regime. If it is your business scientific research or contribution to scientific research, both you deduct under optional tax regime. As simple as that. Right? This conceptual clarity is very much needed. Now come to the next part. Section 35 AD. This is a very specific section which we'll discuss in PGEP in detail. But I'll tell you, it actually talks about very big investment based businesses like constructing a 2-star or more hotel, hospital with 100 beds or more, right? Cross country pipelines for petroleum projects, like that big businesses is covered under section 35 AD. We call it as specified businesses. Now whatever capital expenditure is incurred, that is deductible here. Okay, but what happens? This capital expenditure is deductible only in optional tax regime, not in a default tax regime. So 35 AD related expenditure can be deductible under optional tax regime, and in default tax regime, no deduction for 35 AD. Then you may say, sir, if we file return under optional tax regime, 35 AD deduction we can claim. But suppose we file return under default tax regime, then what will happen to that capital expenditure? Arey, you claim depreciation under 32. Why you are worrying? Right? Normal depreciation is allowed, na? That you can claim. This way you should understand. Okay? Very good. Now, last thing I have to tell you, that section 80, deductions. Okay, let me tell you that if you do capital gain chapter or if you do income from other sources also, there is no difference in both the regimes, right? Whatever provisions we'll study in that chapter, that will apply irrespective of which way you file the return. Whether it is under default tax regime, under optional tax regime, no difference. whether it is right default tax regime or optional tax regime, treatment for capital gains, treatment for income from other sources is same, no difference. Okay, but once you do the total of salary, house property, PGBP, capital gain, other sources, you get gross total income that we discussed. Once you get the gross total income, from that deductions under chapter 6A or deductions under section 80C to 80U. Here what happens is there are few sections to remember, like 80CCD subsection 2. Basically employer's contribution to new pension scheme, right? Employer's contribution to new pension scheme, basically 10% of salary. Okay, employer's contribution to new pension scheme is mentioned under section 80CCD subsection 2. Similarly, under 80CCH subsection 2, whatever government contributes to the Agniveer scheme, right? Those people, the young army people who joined through Agniveer scheme, proud of them. So they get contribution from central government, that part of contribution. Or contribution under or deduction under 80JJAA, right? New employees you hired, additional employment you created. So the employer will get certain extra deduction for creating additional employment under 80JJAA. So what I said, 3 sections from 80C to 80U I discussed. What are they? 80CCD subsection 2, that is new pension scheme contribution by employer restricted to 10% of salary. Second thing I said, 80CCH subsection 2, central government contributing to Agnipath scheme, Agniveer scheme. Then we discussed about 80JJAA, new employment the employer created, for that deduction. So these 3 sections, when we talk about whether it is default tax regime or whether it is optional tax regime, you get deduction in both these schemes. No treatment difference. So both are treated, both schemes treat these 3 sections equally. That means you can claim the deduction for 80CCD subsection 2, 80CCH subsection 2, 80JJAA, whether you file return under default tax regime, whether you file return under optional tax regime. Okay, very good. But what about other sections? What about 80C? What about 80CCC? What about 80D, 80DD, 80DDB, 80E, 80EE, 80EEA, 80EEB, 80G, 80GG, 80GGB, 80GGC, right? 80QQB, 80RRB, right? 80TTA, TTB. So many other sections are there, na? What to do with it? Don't worry, when I discuss deductions chapter, at that time each section I'll discuss in detail. But still, list I have to tell you, na? So what to do with these sections? Under optional tax regime, you claim the deductions for this section. But under default tax regime, no deduction for these sections. Okay? So under 80C, 80CCC, 80CCD subsection 1, 80CCD subsection 1B, 80D, 80DD, 80TDB, 80E, 80EE, 80EA, 80EB, 80H, right? There are sections like 80IA, 80IAB, 80LA, right? There are sections like 80QQB, 80RRB, 80U, 80TTA, 80TTB. So many sections are there. Default tax regime says no deduction. Optional tax regime says yes deduction. This way, if you remember, that's more than enough for now. Okay, let's see how it works in a numerical computation. Let's come back to the solution. Okay, now we did till house property. Come to PGP. How much is your business income? 16 lakhs. Your normal depreciation is something called as 50,000. Additional depreciation is 1 lakh. Your in-house scientific research is 2 lakhs. And your contribution to scientific research is 80,000. Correct? See, right. Now, under default tax regime, what is deductible out of these four? Tell me. Question to all of you. Yes, you are right. Normal 50,000 and in-house scientific research 2 lakhs. These two are deducts. If you deduct 50,000 and 2 lakhs, you will get 13 lakhs 50,000. Correct? This your business income would be. Whereas if you go for optional tax regime, all four are deductible, right? Whether now optional tax regime, your income is 16 lakhs. You can see normal depreciation is 50,000, additional is 1 lakh, in-house scientific research 2 lakhs, and your contribution to IIT National Laboratory is 80,000. So we can say 3 lakh 80 plus 50, 4 lakh 30, if I am right. Yes, 4 lakh 30,000 should be deducted from your 16 lakhs. So 16 lakhs minus 4 lakh 30,000 will come to 11 lakh 70,000, right? This way you should be able to do. So what did you learn? That in default tax regime, only normal depreciation and your in-house scientific research is deductible. In default tax regime, additional is not deductible and your contribution to scientific research not deductible. Whereas in optional tax regime, all the four, whether it is normal, additional, in-house, contribution, all are deductible. This you should learn. Similarly, I discussed about SEZ. 10 lakhs is your income, and because it is 6th year, 50% deduction you will get ICD. Correct? Under 10 AA. So 5 lakhs you can actually claim it as deduction. So obviously that 5 lakhs balance will be taxable in optional. Default tax regime don't consider 10 AA. So entire 10 lakhs income is taxable. Okay. Same way you come to something called as 35 AD. Your business income is 30 lakhs. Your deduction under 35 AD is 5 lakhs. But default tax regime don't allow this 35 AD deduction. So entire 35 lakhs, 30 lakhs is taxable. Whereas optional tax regime allows this 5 lakhs deduction. So that's why under optional tax regime, 35 AD deduction can be claimed. So 30 lakhs minus 5 lakhs. So 25 lakhs is taxable. Under which regime? Optional tax regime. So that's why you should remember that, okay, 10 AA benefit, 35 AD deduction, section 35 contribution related benefit, additional depreciation under 32 benefit. These are not available in default, but can be claimed in optional tax regime. This difference you should be able to understand. Now, I already said that capital gain, there is no difference, right? So capital gain, what we discussed, capital gain, you have 15 lakhs income. So whether it is optional or default, no treatment difference, same. That's why we kept it like that. Income from other sources, there is no difference in treatment. But here you see one line, that minor's income is clubbed in the hands of parent. So in that case, under section 10, clause 32, you will get 1500 deduction. Na? But that deduction is available only in optional tax regime. So that's why your income from other sources was 5 lakhs. From that, when we deducted 1500, 4 lakhs 98,500 is optional tax regime income. 4 lakhs 98,500 is optional tax regime income. Because 10 subsection 32 deduction is allowed. But this is not allowed in default tax regime. That's why entire 5 lakhs under other sources is taxable. This way we got income under 5 heads. We did proper comparative study, and this will always act as a reference for you. Okay, so hopefully you would have written all the notes. Now, deductions come. I already said that if you think about 80 CCD subsection 2, 80 JJAA, 80 CCH subsection 2, these three sections, you will get deduction under both the schemes. That's why if the amount is 2 lakhs, under default also 2 lakhs is allowed, and optional also 2 lakhs is allowed as deduction. But other sections under 80, you will not get the deduction in default. So that 3 lakhs amount is deductible only in optional tax regime, right? These are random numbers which I have taken for you to make you understand. But when you see any question, some number would be there. Only where to put, where not to put, I gave clarity. Numbers are given in the question. So obviously you will become a master of solving these problems. Okay. So this way, when we complete the whole solution, we get the final total income. Okay. So now let's go back to the concepts. When I said additional depreciation not allowed. So obviously when I said additional depreciation not allowed, automatically whatever the unabsorbed portion of additional depreciation in the past, right? Last year's also additional depreciation we did not claim. Now this year we are filing return under default tax regime. So current year additional depreciation not allowed, we discussed in the table. But what about last year's additional depreciations which is accumulated, or in income tax language we use the word unabsorbed, which was not absorbed in the past. So we want at least it can be absorbed now. The income tax says, are you filing return under default tax regime? Then unabsorbed additional depreciation also not allowed. Or let me simplify for you. Whatever sections we discussed, whether it is 10 subsection 5, 10 subsection 13A, 10 subsection 14, 10 subsection 17, 10 subsection 32, we discussed about section 16, we discussed about 24B, we discussed about section 32 subsection 1 clause 2A, we discussed about section 32 subsection 1 clause 2, 2A, 3, right? We discussed about section 35 AD, we discussed about 80C to 80U, all these whatever discussed. If it is not allowed for the current year, then whatever their unabsorbed portion is there, that is also not allowed. If it is not allowed in the current year, their unabsorbed portion is also not allowed. Their previous balance also cannot be deducted in the current year if you are filing return under default tax regime. Please remember this. House property loss, in case of self-occupied, anyhow you will not get house property loss, right? Because interest cannot be deductible. But suppose in let out property case also, if you get the loss, the default tax regime says you set off, you adjust the loss from house property income only, whether it is in the current year or in the next 8 years, no problem. But house property loss from let out house property can be claimed or adjusted from other house property income in current year or in the next 8 years, but cannot be adjusted from salary, PGEP, capital gain or other sources. Now why I am telling this? Because if suppose you are filing return under optional tax regime, house property loss can be adjusted from house property income and also can be adjusted from salary, PGEP, capital gain, other sources. Freedom was there in the current year. But under the default tax regime, house property loss can be adjusted from house property income only, from no other head. This is the condition. Okay. Now, sometimes any loss can be set off under any other law that was permitted in optional tax regime. In some cases, there may be something called as different laws which we have to discuss, but that is not allowed. So if any deduction or exemption is allowed under any other law, income tax also permits it under optional tax regime. But under default tax regime, it says no means no. You cannot claim the deduction if because it is permitted under some other law. Right? Suppose under bonus act is there, some deduction is allowed, some deduction is legal. So because it is legal under that section, that law, in income tax it should be permitted. Like that it was the notion, and it is the notion in optional tax regime. But in a default tax regime, because it is permitted under other law, let us permit under default tax regime, it is not going to happen. Default tax regime will not allow even if it is considered under other law. Okay, that's the point which we have to remember. Right? So we discussed about additional depreciation, we discussed about house property, we discussed about other laws. Now let me tell you that there is something called as due date. Suppose you are filing return under default tax regime, then you can file normally, no problem. But suppose you want to actually switch out of default tax regime, you want to opt out and go to optional tax regime, when you have to do it? The answer is quite simple. Are you a business assessee? Do you have a business income? If the answer is yes, before the due date of filing returns, right? Suppose example, your filing of returns has to be done by 31st October. So before that due date itself, you should opt out from default tax regime and select the optional tax regime. Suppose once the 31st October due date is gone, then you are automatically permanently placed in the default tax regime. Now you cannot get out of it. You have to file return under default only. Okay. So if you are a business income person, then generally in the income tax website, default is selected. And if you want to change before the due date of filing returns, you can actually opt out. But if you suppose opt out also, you have to file every year the return under optional tax regime. If suppose in one single year also you come back to default tax regime, then you permanently lose the opportunity to opt out. You have to file return under default tax regime. Now with the new income tax bill 2025, all these concepts are redundant because there are something new provisions which are coming up. So as of now, exam wise, this much we'll remember and we'll ignore. For business, what is the rule I said? They are automatically selected into default. First point clear. Second point, if they want to opt out, do it before the due date of filing return. That is 31st October generally. Okay. If they do, they can file return under optional. If they don't do, then they have to file return under default. They don't have choice. Suppose if they opt out before return filing, then every year they have to file return under optional. That too before filing returns. Okay. Before the due date or at the due date, they have to file. Once they shift out, that means they come back to default tax regime, then they cannot go to optional tax regime again. Right? Suppose example, one more concept came, that suppose he is not having any business income further, then obviously he has choice. Okay. Every year he can change. So you see the second paragraph. Suppose example, a person who don't have business income, he can actually opt out at the time of filing returns. They did not tell due date of filing returns. They said at the time of filing returns. Suppose even if I am filing late return, no problem. Still I have a choice that I want to continue in default tax regime or optional tax regime. And that too, every year I can change. So more restriction for business assessees and more freedom to non-business assessees can be seen here. Okay. So this way you should be able to understand the concepts. Now let me tell you one more thing, that there is something called as AMT. AMT means alternate minimum tax. So this concept was there and is there in case of optional tax regime. So suppose you are filing return under optional tax regime, you have to compute your income under normal provisions and also under AMT provisions. Then whichever is higher, that tax you have to pay. This is what we discussed. But suppose if you are filing return under default tax regime, then your AMT provisions will not apply. AMT computation need not be done. Okay. So suppose you are a business assessee and you are filing return under default tax regime, AMT provisions will not apply. Right? Suppose you are filing return under optional tax regime, then compute tax under normal provisions, compute tax under AMT provisions, whatever is lower, that tax you pay. It's your choice. Oh, sorry, whatever is higher, that you have to pay. Okay. Now, suppose I'll tell you, I can go into much more depth, but let us discuss that depth when AMT chapter comes. Okay. I'll stop there. One more point I'll tell you, that AMT, there is a concept of credit. So suppose you paid more tax under AMT, you will get some credit. No problem. That credit you can use while paying taxes further. There is a concept of AMT credit, which we will discuss when the chapter comes. Suppose if you are filing return under default tax regime, AMT itself is not applicable. If AMT is not applicable, AMT credit also not applicable. Now, as of now, for your this chapter purpose, what about AMT you will remember? Sir, if default tax regime we are filing return, AMT concept has to be totally ignored, AMT credit has to be totally ignored. This much if you remember, that's enough. Okay. If suppose somebody is filing return under optional tax regime, he'll calculate tax under normal provisions, under AMT provisions, whatever is higher, that tax he will pay. If you remember this, that's more than enough. Okay. Now, let me further discuss something called as rebate. Now, rebate is available under section 87A. What is rebate? Basically a discount in tax. What is rebate? It's a discount in tax. Who will get this discount? Resident individual. Who will get this discount? Resident individual will get the discount here. When if his income is up to 7 lakhs. So rebate is given under section 87A, right, to resident individual if his income is up to 7 lakhs. Clear to all of you, right? I am only talking about section 115 BAC. Whoever is filing return under 115 BAC, for them this rebate will apply. Okay. Let me again repeat for you. Right. 87A rebate is available for people who file return under 115 BAC only to resident individual if their income is up to 7 lakhs. How much rebate? The tax before health and education cess or 25,000. What I said? Tax before health and education cess or rupees 25,000, whichever is lower. So tax before health and education cess or rupees 25,000, whichever is lower is the rebate you are going to get, discount you are going to get. So you have to compute tax as per the slab. Like in Joshi's case, what we discussed, we computed that 20,000, we computed 30, 60, 150, you remember? Yeah, right? Up to 15 lakhs, 15 lakhs to 20 lakhs, 30%. We got 1,50,000, you remember? Till that point, till 2,90,000 you should compute. After that, if rebate is applicable, deduct the rebate, right? And if rebate is not applicable, add health and education cess directly. Now here I said, if the income is up to 7 lakhs, then rebate is applicable. In that case, the income was 20 lakhs. So rebate was not applicable, right? So when we should deduct the rebate? After the slab rate based tax is computed. After adding the slab rate based tax. Before health and education cess. Right? So come on, rebate 87A. To whom? Resident individual. When his income is up to 7 lakhs. How much? Tax paid before cess or 25,000, whichever is lower. This much remember, it's enough. Okay? After rebate, if still some tax is there, then add health and education cess. Otherwise, anyhow it is nil, nothing. Now, if your income is low, government says we'll give discount. But suppose your income is more. Government says we also want more, and that is surcharge. Surcharge is basically a tax on tax. Right? Surcharge is a tax on tax added to the tax before health and education cess. So what is surcharge? When your income is more, government also wants tax more. When? If your income is more. And it is calculated as a percentage of tax. It is added to tax before health and education cess. Right? If your income is up to 50 lakhs, government says no problem, no surcharge. Income is 50 lakhs, 1 rupee to 1 crore, then obviously 10% surcharge. And please remember, it is not slab, it is flat. Okay? It is flat. Right? When I discussed the tax rates, I said slab. When I am telling surcharge, I am telling flat. Please understand the difference. Okay? Let's continue. So if income is up to 50 lakhs, no surcharge. 50 lakhs, 1 rupee to 1 crore, 10% surcharge. 1 crore, 1 rupee to 2 crore, 15% surcharge. 1 crore, 1 rupee to 2 crore, 15% surcharge. 2 crore, 1 rupee above 25% surcharge. So above 2 crore rupees, flat 25% surcharge. Now 25%, 15%, 10% is on income or is on tax? Please answer. Correct. It is actually a tax. It is calculated as a percentage of tax. Right? When we check these limits, we check the income. When we apply the rate, we apply it on tax. This difference you should be able to understand. So when I have to see, right, where is your income? Right? Suppose my income is 3 crores. Then you will see the table and say, okay, more than 2 crores. So 25% surcharge. Then is 25% added multiplied with 3 crores? No. On 3 crores, I'll calculate the tax. On that tax, I'll add 25% surcharge. It is calculated as a percentage of tax. Don't forget this. And tax plus surcharge once we do, then we will add health and education cess. Okay. This way tax liability is finally computed. Okay. But suppose you are earning income under section 112, long-term capital gain. Maybe you sold a building, you sold some plant and machinery. Oh, sorry, not plant and machinery. Okay. Because it is a depreciable asset. So if you sold some building, you sold some jewelry, you sold some gold, you sold some painting, then 112 section will apply. Long-term capital gain. Similarly, if you sold some shares, securities, 112A, if it is held for a long period. Similarly, 111A, short-term capital gain on securities, on stock market transactions. 111A short-term, 112A long-term are both on stock market transactions. If you remember like this, it's okay. Similarly, you get dividend from companies. For this 4 income, long-term capital gain under 111 112, long-term capital gain under 112A, short-term capital gain under 111A, and dividend income. For these four incomes, your surcharge maximum rate is 15%. Sir, what about 25% rate? For these four incomes, 25% will not apply. Okay. Suppose example, my income is 7 crores and in that, suppose 1.5 crores is stock market income. Then on that 1.5 crores, you apply surcharge at the rate 15% because for these incomes, not more than 15%. On balance income, when you calculate the tax, you apply 25% surcharge, right? So for surcharge purpose also, you have to segregate the income, separate the income, right? So 111A, 112, 112A, and finally dividend income not more than 15% surcharge. That means it can be less, but it cannot be more. Okay. And for other incomes, whatever slab, whatever flat rates we discussed just now, that will apply. Okay. This way you should understand. And finally, there is a concept of marginal relief. Now people will tell, sir, my income is 7,10,000. Sir, I earned little more than 7 lakh, sir. I have to pay so much tax. Government said, no problem, don't worry बच्चा, तुमको marginal relief दे देंगे. How will I get marginal relief? I'll tell you how to calculate. First, calculate on tax on 7,10,000. Let me do it for you. So 3 lakhs nil, 3 lakhs to 7 lakhs, 5%. That means 20,000 will be the tax. 7 lakhs to 7,10,000. Only on this 10,000, you will have to pay 10% tax. So how much it will come to? 1,000. So how much is your tax? 20 plus 1, 21,000 tax. And what is your income above 7 lakhs? Sir, 10,000, sir. Okay. 7 lakh 10,000 minus 7 lakhs. That means 10,000 is your income. Oh, 10,000 is your income above 7 lakh. Right? So what government says that if your income is little more than 7 lakhs, what you do is your tax computed, that is 21,000, or income above 7 lakhs, that is 10,000. Whichever is lower is your income. Whichever is lower is your income. Okay. So in that case, what will happen? 10,000 is your tax. Oh, sorry. Whichever is lower is your tax. That means 10,000 is your tax. Then add simply health and education says 4%. 400 will come. 10,400 you pay the tax to government. That's it. So what is marginal relief? If your income is little more than 7 lakhs, then your tax computed before health and education cess, or income above 7 lakhs, whichever is lower, you will get the relief, and whichever is lower is your tax liability. Add health and education cess and pay tax to government. Okay. Then what is the marginal relief? Actually, you are supposed to pay 21,000 tax. You paid only 10,000. This 11,000 difference is your marginal relief. Okay. Sir, my income is 8 lakhs. Will I get marginal relief? Compute and tell. Right? Up to 7 lakhs, 20,000 tax. 7 lakhs to 8 lakhs, how much it will come to? 10%. So 1 lakh, 10%, how much it will be? 10,000 tax. Correct? 10,000 plus 20,000. Your tax is 30,000. Income above 7 lakhs is 1 lakhs. Whichever is lower, how much? So, little above 7 lakhs I said. That means little above 7 lakhs only. Okay. So, if your income is 7 lakh, 7 lakh, 7 lakh 10,000, 7 lakh 15, 20, then you can cross check, right? Compute tax, compare it with income above 7 lakhs. Whichever is lower is your tax. To that, add health and education cess, and the problem is over. You may get some MCQs, or you may get a small question for 2 to 3 marks on this. Right? We did lot of problems. Now we'll do some super critical problems in this next video. And thank you so much for patient listening. Bye everybody.